Could I have your attention so we can start the program? Let me welcome all of you today to the Peterson Institute for International Economics. I'm Fred Bergston, the founding director, standing in for Adam Posen today, and welcoming all of you, welcoming our guests on the webcast to what I think will be a particularly exciting and important discussion on whether the eurozone, both in the short run and over the long run as well. Our guest speaker today, and we could have no better, is Dijsselbloem, the chairman of the Euro Group, the finance minister of Netherlands, and one of the leaders in the entire process through which the eurozone has been going over the last several years to deal with its crisis and now its longer run and structural issues. Jeroen was a member of the Dutch Parliament from 2000 pretty much forward until he became Minister of Finance in late 2012. He must have done something right as minister, because within 3 months he was made head of the Euro Group, which, as you know, is the group of finance ministers of the of the eurozone countries, which takes the lead in dealing with the many problems that they have had. He then must have done something right there, because within another month, they made him chairman of the Board of Governors of the European Stability Mechanism, the ESM. So he had a real run, and he's now had a bit over 2 years in both of those positions, and particularly as chair of the Euro Group, to steer the process, contribute enormously and importantly to resolving the problems of the eurozone. He's going to speak to us today on further steps toward a thriving EMU. We here, as you know, Mr. Minister, have been very strong supporters and enthusiasts for the EMU process. Sometimes we've been fairly lonely voices in the United States in advocating, supporting, and expressing optimism about the likely outcome. So far, you've proven us more or less right, and we hope that will continue, and we look forward to hearing about how you're going to do it. Mr. Minister.
Ladies and gentlemen, thank you, Fred. Thank you for your introduction, and thank you for having me here at the Peterson, which is a great honor for me. When I became president of the Eurogroup after 3 months, it was basically because no one else was crazy enough to do the job. And then when 1 month later I became chairman of the Board of Governors of the ESM, it was because it goes with the other job. So, next time I get a job, I want to do it on my merits. And that's what I'll try and achieve. Thank you all for joining us. I want to talk about the Eurozone, where we are, and what is on our agenda, what should be on our agenda. When I first entered the Eurogroup, first as a minister in November 2012, it was, as you know, the Eurogroup is a group of the finance ministers of the Eurozone, and it was a company still in crisis mode. My colleagues, I'd of course not really been a part of this, only from Parliament, which is a little more distant. But this group had been managing Eurozone crisis for 3 years, basically in a run, designing new crisis mechanisms, building European support funds to support countries who are unable to access markets, designing programs for these countries, 5 in total. It was basically a crisis management body when I entered it. And I'm glad to say that we have changed in becoming much more a government body dealing with structural issues in the Eurozone rather than short-term, immediate crisis issues. I wouldn't say that we've left everything behind us. We are still talking about Greece, of course. It's taking us some time. I'm sure you'll have questions about that, so I won't say anything now. But the main part of our agenda now, the main way we spend our time, is about structural issues and how we can strengthen the economy in the Eurozone. And that is a big difference from a couple of years ago. The Eurozone is on a much more solid footing. And this also allows us to deal with the situation in Greece in a much more calm and controlled manner than we would have done some years ago. I think the eurozone is in a better shape than it was before the crisis. In that sense, we've not wasted the crisis. A lot of work has been done, also on the structural side. There has been criticism on how we dealt with the crisis, and some of that criticism was right. It was a completely new situation in a new setup of governance. There had not been such a crisis before in the EMU. It had to be designed, it had to be developed very quickly. And yes, I'm sure mistakes were made. And yet, institutions were also built at the speed of light, if you look back at it. I think our efforts are now paying off and recovery is taking hold. This year, I think all eurozone members are expecting growth. Also Greece, though we are uncertain how much that growth will be at the end of the year, of course. All the other countries are showing a very strong recovery at the moment. Projections have repeatedly been adjusted upwards, and every new projection by the European Commission again shows an improvement. So I think we're back on a sustainable growth path. We've also witnessed significant progress on the fiscal side. Of course, one of the acute issues we had to deal with over the course of the Eurozone crisis was the fiscal front. We are now working very progressively on a sustainable, bringing the public finances on a sustainable footing. On average, I think this year, the deficits will be below -2.5, closer to -2, 2.5, which is a great improvement compared to some years ago. And we did that contrary to some people who feel that the whole strategy was about austerity and it was extreme. It was extreme for some countries, but on average throughout the Eurozone, it was done in quite a moderate pace, differentiated per country, taking into account the economic circumstances of different countries. The next step, I think now, is to restart the convergence process. And that's what I want to talk to you about today. Restarting convergence in Europe, in the Eurozone in particular, in a sustainable way to lift the growth potential in the Eurozone. I think that is key for what we have to do. So what do I mean by convergence? The European integration process is sometimes compared to a convergence machine. I think it was the World Bank who introduced this term, the convergence machine, in a report some years ago. The convergence machine helps countries that lag behind to catch up with their stronger peers. It requires the strengthening of the performance of individual countries, benchmarking policies at best practices. And in this respect, I think the European model is quite unique and has shown in the past to be successful. And I think we should build on this. This European model is also based on shared prosperity for its people and all of its member states. It's an inclusive model with high standards of living, high standards of welfare. And through convergence, countries are stimulated to keep their systems of social welfare up to date. Their pension system, their labor markets, healthcare systems must continuously be made future-proof to make them and to keep them affordable and sustainable. And much of my personal motivation comes from exactly that, the need to maintain and modernize continuously our European social model. Europe offers many examples of successful convergence. If we go back in time, you can think of the rapid social and economic developments in Portugal and Spain after they joined the Union in the 80s, the rapid recovery in Eastern and Central Europe after the fall of the wall in 1989. And also in more recent years, we've seen impressive processes of convergence. Take Estonia. Since the first decade of this century, Estonia has shown impressive progress. It has implemented sound fiscal policy, sound economic policies, and as a result, its economy is now showing spectacular growth. Living standards improving, unemployment nearly halved from 10% to 5.9 in this year. Now, among the top performers in the EU is Germany, which is another example. As you know, in the first years of the decade, unemployment was far above euro area average in Germany, called the sick man of Europe. It reinvented its economy, took some tough measures, certainly on the structural side, and now has the lowest unemployment rate in the eurozone. I think these examples prove that convergence is a dynamic process. Countries that were once laggards can become front-runners, and also the opposite can happen, which means that it is a continued process of dealing with structural issues in government, in markets, in the economy. We should foster the experience and use it for the way ahead. So what does this mean for our economic policy in the EMU? Let me discuss two extremes. The first model is to leave economic policies fully in the national realm. Policy competition among countries should stimulate the best practices, and if that doesn't happen, markets will discipline those who are wrong or did the wrong things. And to be quite honest, our experience with this model is mixed at best. On the other extreme lies full harmonization. Common policies for all member states, but this model also comes with risks. Not in the least the risk of losing democratic legitimacy within our countries, within our electorates. But also by steering towards the common denominator, we may end up with mediocrity. Importantly, the dynamic of the European models would get lost. I argue, therefore, there is another road. We should embrace the idea of willingness to improve. Willingness to improve, to compete and to learn, to the core of the European convergence model. And we should do so by deliberate targeting and benchmarking at best practices in a constant policy dialogue. But this requires political ownership, political leadership, if you will. Economic policy coordination is not a matter for bureaucrats in Brussels. It has to be taken by the hand by European politicians in an interplay where the member states are in the driver's seat and the European Commission follows, stimulates, and where necessary intervenes in the process. We need this dynamic discussion on a political level to create a shared understanding and for commitment to take action. Show eagerness to catch up, to set the bar high and commit to provide. We've started to discuss key economic reforms in the Eurogroup. As an example, one of the first issues we put on our agenda to analyze, share, compare was the tax burden on labor. Tax burden on labor, which is very high throughout Europe and Eurozone and holds back on the functioning of labor markets, hold back on creating of jobs. The debate in the Eurogroup has led to common principles for the design and financing of labor tax reforms, and more importantly, a firm commitment by ministers to shift taxes away from labor. Initial stock taking shows that many member states are planning and implementing measures, and we are preparing also a tax reform in the Netherlands. These kind of discussions should be taken a step further. My colleagues, President Juncker, Mario Draghi, and Donald Tusk, and myself, we are preparing next steps on better economic governance in the euro area. And I think we should seize the opportunity. For key economic policies, euro member states should commit to benchmarking at the best practice with the aim to stimulate convergence, to get the convergence machine going again. This requires a number of steps. We need to identify key policy areas. We need to reach political agreement on the level of ambition. We need to translate it into an ambition for individual member states, and we need to track the progress being made. This process could be enhanced by a time path within which we commit to bring our policies closer to the European benchmark. In my mind, we need to build on momentum. Over the past years, countries have shown determination. Spain, Portugal, Ireland, Slovenia, the Baltics, to name a few. all of these countries already have an impressive track record of reforms, and I think we are up to the challenge ahead of us. Europe, and the eurozone at the heart of it, must continue on the reform path to open up investment opportunities, become more competitive, having left the crisis, and given the benign circumstances, now is the best time. Thank you very much.
Need to.
Do I need to do anything?
Yeah, you need to push that button to get the green light. Yep, you got it.
Should do it.
Mr. Minister, thank you very much for your introductory remarks, and particularly for focusing on some of the longer-term and structural issues. I hope we can devote a lot of time to those and get some more of your thoughts on them. But you also invited questions on Greece, and we may never get to the long term unless we deal with the short term, both in the eurozone and also in this discussion. So let me take you up on that. Tell us how you see the Greek situation evolving. I know you've got a meeting of your Eurogroup group just a week from today. You'll be discussing it, I'm sure. Tell us how you see it playing out and with what implications for the euro and the zone as a whole.
Well, first of all, let me make absolutely clear that it is my intention and ambition to keep Greece within the eurozone and to give them a sustainable future within the eurozone. Sustainable basically means that Greece should become financially independent again. And this also makes them politically more independent. Full political independence in the EMU is not possible because we also have a joint framework and agreements with each other. But if you're in a program, the fact of the matter is that you'd also lose part of your political flexibility. So that is my aim, my target, and I know for a fact that a vast majority of the Greek people feel the same. They see their future inside Europe, inside the eurozone. So that determines where we are going and what options we are considering. Within that framework, in February, we agreed with the new government to, first of all, create more time, so we expanded the program for 4 months. Second, to create more flexibility for them to allow them to change measures within the program. This is not a new thing. We've always done this. We've talked with other countries also about designing and redesigning the program as we go along. And if and when we reach an agreement on the redesigned package and the process of getting it done, implementation is started, further financial support will open up. That's where we are now. It's taken more time than I'd hoped, to be quite frank, and I think this goes for all of us. It has to do with political situations. There are very distinct opinions in Greece on what is right and what is wrong in terms of economic policy. And there are 3 key cornerstones for us for a program. First of all, it has to be fiscally sustainable, which has to do with making Greece financially independent again. Secondly, it has to contribute to economic recovery, which was actually starting to show at the end of last year before the elections. And I think Greece should be able to pick up on that as soon as possible. And thirdly, the financial sector has to stabilize. A lot of work had already been done on the banks, but more is still to be done. And of course, the current uncertainty leads to a deterioration of the situation of the banks. So we're still negotiating. We will take a little more time simply because it's necessary to get a good outcome. And it has to comply to those 3 major cornerstones of any program, certainly also this one. That's where we are.
You understandably and rightly focus on Greece and what they've got to do. Let me ask you a little bit about the other side of the adjustment process within the eurozone. Your own country is traditionally regarded as part of the strong northern core. And as you know, there's been some criticism that the strong northern core, mainly your larger neighbor, has not done enough on the real adjustment side. Is running huge surpluses, trade surpluses, growing trade surpluses, actually biggest trade surplus in the world now, much of it outside the zone, but also within. So as part of a sustainable program to deal with Greece, but also still the other deficit countries within the zone, can more be done by the northern core to promote real adjustment within the zone, in addition to continuing to extend credits as necessary to get over the immediate hurdles?
The answer to your question is yes, but it's not going to solve the dilemmas that we have right now with Greece. But coming back to your question, yes, the North also has to adjust, certainly on a number of structural issues, but also on the demand side. And that's one of the reasons why, for example, in the Netherlands, we are looking at a major tax reform, which will not only support the functioning, the efficiency of labor market, but also support demand side growth, opening up more purchasing power for employers, etc. The same would go for Germany, where in a number of sectors of the economy, I think there is room for wage improvement, which would also support demand in Germany. And even more importantly, investments, which in Germany have been at quite a long-term low level, public investments, could be brought to a higher level. Certainly, I always make the joke that when I drive from the Netherlands into Germany, and I'm in the back of my car, I have the luxury of a driver, and I'm reading the newspaper, the moment I enter Germany, I don't have to look up, I feel it in the newspaper.
Bumps in
the newspaper starts shifting. So there is reason to invest in infrastructure in Germany.
Those of us who drive in Washington, D.C. know what you mean.
Also, the educational system, I think, could deserve some public investments. So yes, there should be more done. What I don't agree with, and sometimes that enters the discussion, is that we should see Europe or the eurozone as a zero-sum game.
Sure.
I don't believe in that. The Netherlands, my country, has always been an exporting nation, a trading nation, and we will always stay an exporting nation as far as I'm concerned. It's part of what we've built and what we're good at. And I'm not going to criticize Germany for being a strong exporting nation. Europe is not a zero-sum game. We don't need deterioration of the economic situation in Germany for it to improve in Portugal.
Well, I'm very encouraged by what you say about demand expansion as well as structural reform in the northern core. As you have your meetings of the Eurogroup and you design your strategies to overcome not just short-term Greek problem, but the broader questions, are those aspects integrated into the planning?
Sorry, I don't fully understand.
As you plot the course for your convergence motto, even thinking of the medium to longer run, do you kind of think about not only what the deficit countries have to do, Greece, but the others as well, but also what the northern core needs to do by way of real adjustment to promote convergence in that sense?
If you look at some of the key structural issues throughout the eurozone, you don't see a north-south divide at all. For example, the services sector in some countries, from a long tradition, are still very protected, very closed up. And some of those countries are in the south, but one of those countries is also right next door. It's my big neighbor.
Yes.
If you look at the tax wedge on labor, you'll find differences, but on average quite high. If you look at the way labor market functions, some countries have already quite an efficient, open, flexible labor market. Some are still very inflexible, let me put it that way. So, and this goes right through Europe. It's not about the north and the south. Actually, interestingly enough, when I first entered the Eurogroup, many debates took place along north-south divide lines. And that situation is quite different now. In the debate about how should we deal with the situation in Greece, you'll find some of the countries in the south quite stern and tough on what they think is the right approach. Also because they felt that they went through it themselves and it's paying off in their countries. The same happened when we, in about a year and a half's time, we built the banking union, which was a major project the last couple of years. Many of the debates didn't take place along North-South Divide at all. It very much depended on how banking sectors were designed, what they looked like, what the interests of different countries were. So this whole North-South thing is becoming less and less relevant in my mind, which is good, because it was becoming a risk for the sustainability of the eurozone. And I think that is also fading away.
Let me ask you one more question, then I'll open it to the group. And coming back to your focus on the medium to longer term, you emphasize the need for individual countries within the zone to emulate best practices, converge, et cetera. Tell us a little bit about the other part of the longer term evolution, namely of the European institutions themselves. You mentioned the banking union. There's obviously been a lot of talk about other types of mutualization, if one wants to still use that word. A lot of that came up during the crisis period. Maybe there's a little less talk of it now. What's your sense of where your Eurogroup and other institutional arrangements within the zone are headed on that front? Do you see a continued move toward integration in an institutional sense? And if so, what areas would be your priorities?
If I may, I'd like to answer that question on two levels. First of all, I think Europe has been built by defining time and time again the next big project. And that was a way to bring Europe to a higher level, to bring the European integration at a higher level. The expansion of Europe in the 80s, for example, was one of those big projects. Right. And the introduction of the euro and the building of the EMU was one of those big projects. I think that in the future, we shouldn't look so much for the next big project. We should look much more for evolutionary strengthening of the way we are now designed. I'm not saying that we can't adjust the current governance or the institutions or build new institutions. For example, the banking union was a very strong case to build new institutions and new common frameworks, and new examples may come up in the future. But the whole way we've built the European Union so far, with the next big project, the big step forward, I don't think that from now on is the approach. I think we should look for a more evolutionary, gradual growing of our cooperation, strengthening our institutions. To give you an example, we've now set up the banking union. But there are a lot of work within that banking union which still has to be done. To strengthen it, to make it even more credible, to raise standards, to take away the many differences that are still between the national member states, also in banking legislation, gradually take those differences out. I think that is, at the moment, a more sound approach for Europe than the next big project. It also has to do, and then I'll stop, with democratic legitimacy. I think we have to take much more into account the fact that our electorate is worried about the next big step. They were taken when Europe expanded quickly to the 28 members. In that period, I think we were driven very strongly with idealism, also forced by the new political circumstances of the opening up of Eastern Europe. But we have to look again at how we strengthen the inside, how we take our electorate on board again, how we can strengthen their confidence that the EU is a good thing and that the euro is a good thing for them, and not just for the corporates. That's the kind of skepticism we have to fight. I think we have to take that into serious consideration.
As you and I were saying at lunch, it sounds a little bit like the debate we're having in this country about globalization, where the need is to reinforce the view, if we can do that, in the electorate, that it's a good thing and needs to be supported with, in our case now, new trade agreements. But some of the backlash is, I think, quite similarly motivated to what you're experiencing reporting in Europe. Okay, let's broaden it to the audience as a group. Already I've got more questions than we have time to answer, but we'll try. We've got a standing mic at the back, so if you're toward the back, you should go to that. we've got a traveling mic up here, and in either case, please identify yourself initially, tell us where you're from, and then fire away. I'll start right here, and then go to the back. No, in front of you, and then we'll go there, and then back to Randy. And then we'll come to Krishna. We'll line up the first four.
Antoine van Achtmaal, a countryman, but I've lived in this country for a long time. You spoke, I thought, quite optimistically.
Identify.
Garton Rothkop, and formerly in emerging markets. You spoke quite optimistically about the longer-term structural future of Europe. Now, if it is true that the future competitive battle will not so much be about cheap labor, but about smart innovation. Clearly in Holland you have Eindhoven and lots of really sparkling examples. But do you see, with your role as minister and role in the Eurogroup, do you see innovation, number one, as a high priority? And second of all, do you see the support for it as a national or more a European issue?
Well, the first question really doesn't need answering, but I will answer it. Of course, it's crucial because a lot of our competitiveness depends on it. And expenditure in Europe, both from the private as the public side, on innovation, R&D, etc., research, has been too low. Also on the private side. So that is a key issue. I think support has to come from both levels. On some of the major scientific programs, the European Commission now plays a major role in financing those. But certainly also national governments can do more. It's interesting to see that some governments have, over the course of the crisis, I mean, we all had to look critically at our expenditures. Some governments have deliberately left spending on education, research and development, innovation, left those kind of expenditures alone and looked more critical at other parts of the budget. And others have not made that distinction. I think that the latter have made the mistake. And I think that certainly what we've tried to do in the Netherlands, we've had to cut on basically all the issues you can possibly think of, but education spending was left alone. I think that's the kind of choice governments throughout Europe have to make.
Yeah, right here. Wait for the mic.
John Dijsselbloem, to comments to the Financial Times. Since Cyprus, or the Cyprus imposition of capital controls in Cyprus, you must have given some thought to systematizing how the capital controls under Article 65 might be imposed imposed by a member state in the future. Should a member state impose these without an agreed program in place, or should they impose them for a long enough period of time so that distortions start to show up in goods and the free movement of goods and services with the rest of the zone? How long could these emergency controls stay in place under Article 65 without really forcing someone, putting someone in long-term in violation of the aims of Article 63, the free movement of goods, capital, and persons?
It's a theoretical question in a sense.
Well, it won't be in a week or so.
It is a theoretical question because in Cyprus, a program was put in place. So that's my answer. And Cyprus has, I think, very recently lifted the last capital controls. They have performed very well in managing the situation, and the program has been very successful for them. They have, within, I think, all the targets and the expectations of when they would return to growth, etc., they've exceeded them in every sense, and they've done. I know, I won't speculate too much on that.
Randy. No.
There we go. I'm Randy Henning at American University. Minister Dijsselbloem, I'd like to extend the line of questioning on Greece, asking a somewhat more medium-term question. In the statement of the Eurogroup in November of 2012, the Eurogroup agrees to an arrangement whereby the Greek debt to GDP ratio would be reduced to 120 by the year 2020 and by 110 by the year 2022. My question for you is, in your current deliberations with Greece, are you still working within the framework of that document, or do you regard that document as null and void?
Those timelines and those targets helped us design the program at the end of 2012, when we basically redesigned the second Greek program. Whether we are still on target, I don't know, because we don't do a debt sustainability analysis every quarter. What I do know is that the only thing we can expect from the Greek government, whomever is the Greek government, the only thing we can expect from them is to try and uphold their commitments in the program, and then we will uphold ours. If that way, in a disciplined manner, we come to the end of the program, which, as you know, the end has now been put at the end of June, then we will once again make that debt sustainability analysis. And we also said in that statement, November 2012, that if Greece commits fully to all the measures, etc., in the program, if the primary surplus is positive, if they've reached the primary surplus, and debt sustainability has taken another hit for whatever reason, we stand ready to look again at their debt situation. And that is still the current situation. I'm still very much committed to that. But it requires that, first of all, we try and finalize the program. And then we'll take stock of where we are, how sustainable is their debt situation, and if necessary, more can be done. That's what we agreed, and I will stick to my part of the deal.
Could you maybe theorize a little further and suggest, you just said, if it went up to that stage, you would then see what could be done. What could be done to further round out that program if one gets to that point?
Well, I think there is very little appetite in the Eurogroup, if not to say no appetite, to cut the nominal value of the loans that are outstanding. Yet, as you know, there are different measures you can take to relieve the debt burden. And we already did so in quite a massive way at the end of 2012, when we reduced the debt burden by 40%. Lengthening maturities, taking off all the risk premiums, bringing down interest on these emergency loans. More could be done along those lines. I don't want to speculate, I don't think it, but I think we all know the different options that we have, and that's what we will look at if we come to a situation where the current program is ended successfully. There is a need for further debt relief measures, and then we will look at them. But that will have to be the order to deal with it.
Okay. Additional questions? Krishna.
Krishna Guha, Evercore Partners. Minister, in all the complicated and difficult negotiations with Greece around completion of the program, the issues that seem most difficult for the Greek government are ones that have to do with pension cuts and labor reforms that allow mass terminations of employees. Are these issues that you believe to any degree can be subject to negotiation and flexibility? Or are those issues that, without the completion of which, we cannot think about a satisfactory conclusion to the program as a whole?
To me, there are no issues off limits in advance. But the current functioning of labor markets and the pension system has to contribute to the changes to labor market and the pension system, has to contribute to the cornerstones I mentioned, in particular the economic recovery, and secondly the fiscal sustainability. The current pension system, and Greece is, by the way, not alone in that problem, is not sustainable, which has to do with the way it's currently financed and the issue of aging population, etc. So I'm not saying it's off limits. In other words, they have to do what was originally in the program. Of course, we can discuss. You can always discuss the design of reforms, the timing, the way they are done. but they are very important. There can be no misunderstanding there.
Other questions? Jacob?
Jacob Kierkegaard here from the Peterson Institute. I mean, one of the things that have been spoken about quite a lot is the issue of trust. Of course, right now between Greece and the other creditor countries in the eurozone, but more broadly among all the members of the currency union. And I was wondering, in not just narrowing itself to the Greek situation, but more broadly, what are the kind of concrete measures that you think that something like the Eurogroup could take to improve that? Because there needs to be an additional degree of transparency, I would imagine, and especially when it comes to this issue of verifying the effectiveness of structural reforms. Because if we think about where fiscal surveillance and these types of issues are going, not just in the Eurogroup, but in the entire EU, it's essentially becoming more and more technocratic. We're debating at the political level issues about which type of models to assume a structural or potential growth rate and these types of things. And it basically, it becomes very amorphous and difficult. Certainly for the kind of democratic legitimacy that you initially talked about, and ultimately about the public trust in the institutions, including the Eurozone. Is there anything you feel, as president of the Eurozone, that you could do to promote these types of transparency issues, simplicity issues, and ultimately trust?
Trust comes at different levels. First of all, there's the trust of the outside world in the Eurozone. Is it sustainable? Will it stick together? Are they going to perform? And I think that trust has returned, but is still vulnerable. There is a trust between member states. I don't think that can be effectively dealt with by new rules or new mechanisms or new supervisors. I think the key question here is whether all of us deliver on what we have committed. And the last couple of years, a lot of emphasis was, of course, on the fiscal policy. We should all deliver on our fiscal targets. We should all deliver on dealing with the banks. A lot of work has been done there. And the next major issue is delivering on structural reforms. We don't really have as strong mechanisms on the structural reform agenda as we do on fiscal issues, or we now do on banking issues. So the key question is, how can we work on those structural reforms, put some pressure on each other, peer pressure, get things done, without necessarily building new institutions and new technocratic mechanisms. I think one of the improvements that we've done, which I pleaded for very strongly, is to allow more flexibility on the fiscal side when countries are pushing forward reforms. There are, in many ways, a connection between dealing with your fiscal sustainability and doing the right reforms in the right time. An obvious example is pension age. If you increase pension age, which can take time, many countries do it gradually. Gradually, it will tick into your budget. It will also improve very much your fiscal sustainability in the medium term and the long term. And one of the things that we've done, very recently, the European Commission has publicized this flexibility paper. One of the good elements in that was exactly that link. If you want countries to be rewarded, to get the time and also the political time to do the reforms, you must take that into account when you judge their fiscal sustainability. I think that was possibly one of the greatest improvements we've done the last couple of years on the fiscal system. Of course, there will be questions, but are those reforms, are they serious? Will they actually be implemented? Will you get them through Parliament? And all of that is true, and the Commission will have to find ways to form a serious opinion on that and to step in on the fiscal side, where they are strong, where they have the instruments, to step in if the reforms are not delivered in the end. So there has to be a mechanism of control. But it has to do with trust. I think we have to trust member states a little more and allow them also some flexibility, some time to get those reforms done. And that's what we've done. I think that's a good example of improving trust.
Question over here.
Thanks. Landon Thomas, New York Times. In terms of the debt question that you addressed, do you worry that in terms of being flexible for the long term, given what Greece needs to do in the short term, that in June it may be too late? And do you see any possibility that Europe can be flexible in terms of offering Greece a way to figure out another way to make its payments in terms of the ECB payments coming due in June, because those are big, more than the country can afford? Thank you.
Well, I think that it has to be clear that making the payments in time is really the responsibility of the Greek government. If European funds are needed for that, then that would be a great motivator to really sit down and finalize the negotiations on the package. And I think it can be done. I understand political difficulties. Sometimes I understand economic and financial difficulties, but it can be done. We are open for negotiations, and I think they are also. But it was a new government, in many aspects also inexperienced, experienced in academics, but not experienced perhaps in politics. And so let's help them and work with them. I'm not going to take the confrontational approach. I think a lot of people have done that in the media. It's not been helpful. If you really want to negotiate and find a solution, a little less media exposure and a little more closed doors and sitting down. And I think it can be done, even though the time is ticking away.
Yep.
You made...
Please identify.
Sorry, Phil Suttle, Tudor Investment Corporation. Minister, by the way, I have to say, I think you have the toughest job on the planet, and you're doing a phenomenal job with it.
Thank you.
You can characterize the whole euro adjustment effort as a whole wave of one innovation after another. I mean, you've done a tremendous amount to deal with shifting circumstances. And isn't it pretty clear now that you mentioned you had 5 countries in programs, and 4 have successfully, it's worked in 4 of them, essentially. But 1, it hasn't. 1, it's, putting it bluntly, been a disaster. We see that disaster sort of playing out almost on a daily basis now. So isn't it time to say, well, actually, we need a completely different approach to this country? And in doing this completely different approach, it's actually not going to come back to haunt the others, because they successfully graduated under the old approach. And I'm tempted to take you back, and Fred remembers this well, to the Latin American debt crisis, where we kept trying things, and for some countries they worked, but for others they just didn't work. And in the end, we had to come up with a radical new solution that was the Brady Plan. Isn't it time to kind of recognize that we're getting towards that in the case of Greece?
First, let me pick up on what you said, that the program didn't work. As a matter of fact, you stated as a matter of fact, actually that it was a disaster. If you will allow me to disagree, I think that the situation in Greece was much, much more difficult. And if you really go to the core of it, it also had to do with institutions, the quality of government, the quality of the political system, and the political culture, etc. Dealing with those issues are very often much more difficult than simply debt restructuring. And therefore, when you say, shouldn't we approach it completely different, I'm not sure whether we can help Greece, which is my sincere intention, if we don't address those very fundamental issues. And the only way we can do it is with the Greeks and with the Greek government. That's my conviction. And therefore, we can't, you can't step in and take it over. It has to be done and supported by the government you work with and the population. But I think that's, if you really go to the core of the problems, why is it that in Greece it's been so much harder to roll out this kind of program? Why is that? I think it has very much to do with the functioning of public sector, institutions, government, political culture. Those are also the most difficult to change.
But
Having said that, I'm sure we can learn from the Brady Plan for the future. Many people have pointed it out to me, but we can't forget about those kind of issues and problems that I just mentioned.
But just to elaborate and pick up on the point, if you're right, and I have no basis to disagree, that the Greek problem is qualitatively different from the others. I think that's what you're saying, because of some pretty deep-rooted structural and even cultural issues. Doesn't that, in a way, make the case for a different approach? Now, where that approach leaves Greece is hard to say.
Within the program, which is the framework we use, but within the program there are major differences. Every program is very different. The kind of emphasis you put inside that program is very different for Greece than it was for Spain, which was a banking program, or for Ireland. Completely different issues, different approaches, different obstacles in terms of legislation to deal with, different kind of institutional reforms that are necessary. And the current government has been very aggressive, very adamant to deal with bureaucracy, corruption, to reform the political system, to deal with oligarchs and protected markets and interests, vested interests. And I'm the greatest supporter of those issues. So if that's the kind of changes that they would like in the old program, we're open for business. Let's talk. Of course, it needs to be developed and thinked out. How do you do that? I mean, it's easier to say I will improve tax collection, but how to do it? But it can be done, don't get me wrong. I mean, there is a lot of knowledge from international partners, from neighboring countries in Europe that could help and have prepared to deliver technical assistance. But it needs to be done. It's tough stuff, but it can be done. So the Greek program will, and already has, but certainly in the future, put a great emphasis on those issues, which are also priority for the new government. And I support them on that.
Yeah.
Hi, Tom Ellis from Kathimerini from Greece. I'm just wondering if you could describe your relationship with Mr. Varoufakis, because your first meeting in Athens was a little bit, how I should describe it. And do you trust him? Because I spoke to a lot of colleagues of yours and others, and there's a debate there. So I don't know how you can be on the record on that, but...
My relationship with the minister is very good, as it is with all my colleagues in the Eurogroup. That's my first point. Second point, yes, I trust him. I think trust is an obligation that you have when you are working together in the Eurogroup, so per definition. And thirdly, when I went to Athens, I did that to make a statement. It may have been ill understood, but the statement was, there is now a new political reality in Athens. There is a new government. And we, from the Eurogroup, we stand ready to work with them. And that's why I went to Athens. We spoke on the phone before that, and Mr. Varoufakis was also very much prepared to come and see me. But he said, no, let me come to Athens. We had a very good meeting, and at the press conference, Mr. Varoufakis went back to election mode, which wasn't an insult to me. People said, oh, were you insulted? No, it wasn't an insult to me. It was just, I realized that elections had only just finished in Greece. And I felt I was right in the middle of the election campaign again. But the fact of the matter is the elections have now taken place. They've won. They are now the new government, and therefore they now have to take the responsibility that comes with that. And in every government, you have to sometimes adjust to reality, sometimes find compromises within your national politics. But the reality of nowadays is that you also must compromise with your partners in Europe. And that's where we are.
Next question. Wait for the mic.
Ebrahim Barbari, an economist at Citi. Now, the outlook in the eurozone is really quite favorable now, and you said at the beginning that the good situation allows you to be quite calm when dealing with Greece. And I do wonder, a little bit more than a year ago, Europe had been growing for a couple of quarters, and then we were suddenly hit by a shock out of Ukraine and Russia. And in a fairly short period of time, the recovery was stepped short in its tracks, and it took pretty dramatic changes for us to get to the point where we're in. We had dramatic ECB intervention, we had the fall in oil prices, we had the weaker euro. So it wasn't a very easy process to get to this stage. So I wonder whether you get any sense that when people say, as we have heard a couple of times over the last few days, that the consequences of a big shock out of Greece, which can take various forms, but a big shock out of Greece could be dealt with, are manageable in some sense. Do you get any sense that this might be a little bit too sanguine, that perhaps the vulnerabilities are a little bit larger than they currently seem? And specifically, what type of measures could be taken to respond to a bad outcome? And I want to emphasize, when we thought about the shock in Greece...
If you ask too many questions, I'll only answer one, and I'll choose. So
Okay.
You could stop here, and I'll
I just wanted to... It's not a question. I just wanted to highlight the shock out of Greece was not financial contagion. It was not... So very much, I'm not talking about contagion from Greece going to Spain and Portugal. It was business sentiment, consumer sentiment weakened. The recovery stopped.
Yeah. First, let me go back to the setback that we had in European economic recovery due to Ukraine, etc. It was quite a temporary setback. I can remember when we were in Washington, the IMF meeting in October, the IMF said the chances of recession for Europe have now increased from 30 to 40%. And markets dropped. And I said to my people from my ministry, I said, what's going on? Has the real structural changes and adjustments that we're doing in Europe, have they suddenly faded? Are they gone? Of course they weren't. So yes, there was a shock effect, but quite quickly again, within a couple of months, economic recovery picked up again because structurally we were doing the right things and adjusting. As for Greece, there won't be a shock, at least not as far as I can help it. You're quite right to say that maybe at the moment it's not so much a direct economic or financial shock. If it were to take place, it would have an impact on political trust within the eurozone. What would the consequences be for the sustainability of the system as a whole? And there could be consequences in terms of consumer trust, etc. I think you're right. But going back to the previous point, there won't be a crisis. I think we should do all that we can to prevent it. And I think there are plenty of options.
If there's no other question on Greece right now, let me just raise one more and come back to something you talked about in your remarks. When you were focusing on the need for convergence, and you gave as one example the tax burden on labor. And you described that, I thought, very nicely. Are there other issues of that type that you have currently on your agenda where you're thinking about medium to longer term convergence to strengthen the economies throughout the zone and therefore reinforce the positive outlook?
I think one of the issues that we still have to deal with is how we deal with economic shocks, shock absorption. And I don't mean creating a new budget at European level to accommodate shocks, because that is not a preventive way to approach them. That would be so what I'm looking for is how we can adjust our economy, that the economy in itself shows much more shock absorption capacity. One of the issues in Europe is still the protected sectors, certainly in the services sectors, and the protected professions. There are still thousands of very protected professions within countries, within sectors, which prevents the economy from adjusting when a shock takes place, because it basically means that you have little flexibility in your labor market. People cannot simply shift to different sectors or different professions in the economy and cannot adjust to economic shocks. So I think over a much broader scope, we should think about how we can make our economy much more shock resistant. We've done so for the banks. The banks are much more, well, I hope they are, shock resistant and should become even more so. We've done so for budgets. Our budgets are in a better situation, but should improve even more before the next shock arrives, allowing a fiscal setback to be received within the budget without completely upsetting it. But we should also look at the economy, how the economy becomes more flexible and more capable of picking up on economic shocks. I think that's still a key issue to deal with.
One thought in that context, we, Europe and the United States, are now involved in a big trade negotiation, Transatlantic Trade and Investment Partnership, whose stated objective is to reduce those kinds of barriers that you're talking about that impede market flexibility, response to crises, and strengthen the longer-term growth prospect. I know you and your finance minister's group are not at the center of that, but do you see a trade negotiation with the U.S. with the stated objective of reducing regulation, reducing market barriers, increasing flexibility of our economies as a possible impetus to getting the kind of reforms you'd like to see?
When you look at where is our growth potential, for Europe at least, I won't judge where the growth potential for the US is, but for Europe, the OECD has, for a number of times now, pointed out that if we do the right structural reforms in the different countries, bringing it up to sort of a benchmark level, best practices, there is, over the next 10 years, an additional 6% economic growth in Europe. The second best opportunity for potential growth is trade, international trade. So therefore, I'm very much in favor of international trade agreements, and I think we should put a lot of political effort into it. It's going to be difficult. It's going to be difficult in Europe, where people are worried about the standards of protection for the environment, labor quality, etc. It's going to be difficult in the US, where some will say we must protect our markets and our workers instead of opening it up. Let's try and deal with those issues and get it done, because I think beside the structural reform agenda, which I spoke about, international trade and opening up international trade is still a potential extra growth factor for Europe and for the US.
Any further questions? If not, and in recognition of the fact that you do have at least one of the toughest jobs in the world, we want to thank you enormously for spending time with us today.
Thank you.
Sharing your thoughts so candidly. We wish you the best of success, both in the short run and with your longer run agenda, and we'll hope to get periodic reports from you and discussions with you on how it's going. Good luck. Okay. Thank you all. Thank you.